When you understand how common those needs are, now you formulate your script and sculpt it in a way where that's the whole intent. And so, for example, all the people you wrote loans for who are FHA, with the spike in equity, I would create a campaign that would sound something like this. Like, you know, hey, this is Daniel with ABC Lending. I just want to give you a quick notice. We're sending you a complimentary notification to your email. It has to do with a campaign that's specific to only a few of our past clients. You happen to be one of them, and I've been assigned to update you. So anyway, that email is going to go to, you know, daniel@gmail.com. Is this email still valid? Yes, it is. Got it. Okay, cool. So while I got you on the phone, let me button it up to make sure it's worth your time. We helped you do an FHA loan about 6 months ago. And the reason for this campaign is because values have spiked so much. So now we're helping our past clients exit FHA or remove mortgage insurance. Now, the reason why you want to take part of this campaign is even though the rates are up, we are giving you special access because you have that history with us. So in order to activate this campaign and reserve your seat, I need to ask a few basic questions before I send it to you. Does that make sense? Now I have full play.
But then what are those questions?
Yeah, the questions are really basics. You know, even if you go back to the script and say, okay, so the property here on Memory Lane, this is still your primary residence, right, Santino? And play with me. So give me some objections, right? All right, so this is still your primary residence? Great. So as you notice, properties have, you know, it's been a seller's market. Properties go on, you know, on the market and they're gone within a day. A lot of people are doing these cash buys, but anyhow, how it relates to you is your equity is actually increased. And the whole reason why you even have mortgage insurance is because you didn't have enough equity at the time we wrote your loan 6 months ago. Does that make sense?
Yeah.
So in most cases, I don't even need an appraisal. It's just simply how strong the market is. Now, why you would probably want to put this in place is because if you don't need the extra savings, simply send the same payment, but with this lower payment, you have the flexibility to pay your principal down much sooner. And again, that actually just increases your equity. So this is how it works, Santino. Check this out. Now, with regard to the mortgage, besides this, are there any other debts you pay? Let's start with credit cards.
I pay about $275 on the credit cards right now.
What's the balance? Just rough estimate.
Around $6,000.
And is that combined or just you?
That's everything.
The $275, is that the minimum or are you paying above due?
I pay above due when I can.
Okay, so this campaign has this thing, it's called net. So I know you have a gross income, but of course the tax man takes their share and you have net, right? Well, we need to know what your net is in order to qualify for the campaign. Essentially, Santino, what net means is after all your bills are paid, mortgage, credit cards, groceries, daycare, whatever it is, right? How much of your monthly net income are you netting to yourself? What's your cash flow?
Varies on the month.
Yeah, let's just use last month, for example.
I'm about $1,200 last month.
That's good. That's actually very strong. Good for you. Okay, so if you're adding $1,200 in extra cash flow to your checking and savings, what's your average balance?
About 10 in one account and another 8 in another account.
Good for you. Okay, so you have a nest egg, right? Now, with regards to that cash, are you noticing the balance stay the same, or is it increasing a little bit or decreasing?
I tend to buy things when it starts getting a little bit higher.
Okay.
I'll put a little in and then take a little bit more out. So.
Okay. The good news is you have that option, right? So with all that cash flow, you have one of two things that you could do. Number one is you could pay more than you need to pay this mortgage insurance, or number two, you could activate this campaign to remove the mortgage insurance and increase that extra cash flow so you could buy whenever you want. Keep that flexibility as one of your own options, and all you're doing is just improving the term that you already have in place now. So this is how it works. Right. And so I'm carrying you through the conversation. I'm not asking you, you know, because I already did a loan for you. Are you still employed with, you know, Costco? Right. Do you still work there? So you're still getting the 2 years, but it's a natural conversation. Yeah. And the reason why they're more inclined to do business with you is because they recognize you. If not you, they recognize your business name.
Connected to SalesRemastered.